You're listening to Uranium Spotlight, brought to you by Purepoint Uranium Group, your exploration partner in the most prolific areas of Canada's Athabasca Basin. With a collaborative investment model on district-scale projects and validation from industry leaders Cameco, Orano, and ISO Energy, Purepoint is investing in Canada's uranium future. And now your host, Chris Frostad.
This week on Uranium Spotlight, term demand builds. India's nuclear outlook continues to move closer to the private sector. The U.S. Energy Information Administration releases its annual uranium supply report, and Denison and NexGen continue to march to production. The uranium spot price closed last week at $72 a pound, up from $70.95 a week before, delivering a weekly gain of $1.05. Market volumes continue to ebb as the summer lull drags on. Early in the week, activity was sparse. Monday saw no transactions, while Tuesday, Spot Physical Uranium Trust reported buying 50,000 pounds, driving the price up $1.20 to $72.15. Wednesday and Thursday, price dipped to $71.65 and then $71.30 respectively, as bids and offers softened with no reported trades. Friday brought renewed clarity. A 100,000-pound deal delivered to Cameco pushed the spot to $72, marking the week's close. As of Friday afternoon, price ticks edged slightly higher to $72.05 based on prevailing bids and asks. Location premiums widened too. Cameco delivery jumped $1.50, Orano was up $1, and Coverdine climbed 75 cents. Meanwhile, the term market is humming with life. A new non-U.S. utility requested up to 880,000 pounds annually for 2027 to 2036. And other U.S. utilities are advancing offers for 2029 through 2033 supply. Plus, RFPs and off-market negotiations are heating up across the board. Spot activity may seem subdued, but price swings and sparse volumes underscore how sensitive this thin market remains. Modest trades can swing pricing. At the same time, robust term contract momentum signals sustained long-term demand. For uranium-focused equity investors, that dynamic, spot volatility paired with contract demand, offers both risk and strategic opportunity. If you haven't already, be sure to subscribe to Uranium Spotlight podcast, available on your favorite podcast platform or your Purepoint Uranium's YouTube channel. India is moving closer to opening its nuclear power sector to private investment. Last week, the government confirmed it is finalizing a framework to decide which companies will be allowed to operate nuclear power plants in the country. Eligibility will hinge on financial strength, technical capability, a proven track record, and likely a sustained history of positive revenues. Experiences delivering large, complex infrastructure projects is also expected to be a key requirement. The scale of India's nuclear ambitions is significant. The government targets 22 gigawatts of installed nuclear capacity, roughly 22 large-scale conventional reactors, by 2032. By 2047, that goal jumps to 100 gigawatts. Today, India operates 8.8 gigawatts, mostly from smaller indigenously built reactors developed by the state-owned Nuclear Power Corporation of India Limited. To get there, India must reform two major laws. The Atomic Energy Act currently prohibits private sector investment in nuclear power. The Civil Liability for Nuclear Damage Act holds plant operators and potentially reactor suppliers liable for damages in the event of an accident. That liability framework, designed to shield the government from public backlash, has become a barrier to attracting private and foreign investment. By revising these laws, India hopes to draw in domestic companies, foreign players, and new reactor designs, accelerating its build-out to meet those 2032 and 2047 targets. For investors, if these reforms pass, India could become one of the largest emerging markets for nuclear build-out over the next 2 decades, creating new demand for uranium, new opportunities for reactor technology suppliers, and potentially significant growth in the global nuclear fuel cycle. Watching how quickly these legal changes move could give early insight into future uranium demand growth from one of the world's fastest-growing economies. The U.S. Energy Information Administration released its annual uranium supply report this week, showing domestic production reached 677,000 pounds in 2024. That's a 1,300% jump from 2023's all-time low of just 50,000 pounds. but still a fraction of the 4 million pounds produced in 2014. And compared to global production in 2022, the U.S. wouldn't even crack the top 10 uranium-producing countries. The bigger picture hasn't changed. The uranium market remains sharply divided between East and West and has been critically undersupplied for years. Utilities, especially in the U.S., continue to draw down their strategic stockpiles of uranium and nuclear fuel at an accelerating pace. The EIA notes that U.S. producers had a combined capacity of 7.5 million pounds in 2023, with an expected 14 million pounds in 2024. But capacity is not production, and actual output is nowhere near those figures. The U.S. is still the world's largest consumer of uranium, yet it produces next to nothing to meet its own needs. Closing that gap will require serious investment, streamlined permitting, and a clear commitment to domestic nuclear fuel supply. For investors, the takeaway is clear: the U.S. nuclear fleet will remain heavily reliant on foreign supply for the foreseeable future. That ongoing structural shortfall underpins long-term demand for uranium and keeps upward pressure on prices, especially for producers and developers in stable, politically aligned jurisdictions. Denison Mines announced this week that it's moving ahead with its Wheeler River in situ recovery uranium project after receiving environmental assessment approval from the Saskatchewan provincial government. In situ recovery is still relatively new to the Athabasca Basin. Instead of using an open pit or underground workings, the uranium is dissolved underground, often with a sulfuric acid solution, and then pumped to the surface. It's a process that can reduce surface disturbance and lower the environmental footprint compared to conventional mining. The approval drew praise from Saskatchewan Premier Scott Moe, who pointed to the province's position as the world's second-largest uranium producer, its strong regulatory environment, and its role in advancing Canada's profile as an energy superpower. He also noted that the project will bring new jobs and opportunities to northern communities. With the provincial environmental assessment complete, the next steps are to secure the Provincial Pollutant Control Facility permit, obtain federal environmental assessment approval, and receive the federal license to prepare the site and begin construction. Those last two approvals will be the focus of Canadian Nuclear Safety Commission hearings set for October and December of this year. If everything stays on track, Denison hopes to begin construction in time to meet its target of starting production in 2028, although large projects in this sector often face delays. Wheeler River will be Denison's first new uranium mine in many years. It's the largest undeveloped deposit in that part of the basin by tonnage and ranks third in grade behind Cameco's Cigar Lake and McArthur River. The project carries an estimated value of $1.16 billion and a mine life of about 10 years. Proven reserves stand at 3.4 million pounds of U3O8, grading 24.5%. While probable reserves total 53.3 million pounds, grading 11.4%. For investors, this approval moves Wheeler River from being a paper project to one facing execution risk. If Denison succeeds, it would bring significant new high-grade supply into the market later this decade, and it could establish in situ recovery as a viable method in the Athabasca Basin, something that might change the economics of future uranium projects in the region. NextGen has wrapped up its 2024 assays and kicked off 2025 with more strong results from Patterson Lake Corridor East, a discovery that's turning heads, sitting less than 2 kilometers from and directly on trend with the Hook Lake project held by Cameco, Orano Canada, and Purepoint Uranium. The latest hole, RK25227, hit 12 meters at 3.46% U3O8, with 2.5 meters running 14.9%, and a half a meter at a stunning 31%. That's between two earlier holes, one with 15 meters at nearly 16% and another with 17 meters at almost 4%, showing this high-grade zone is holding together over significant distances. It's basement hosted, has a high-grade core, and remains open in all directions, much like Arrow, which is just a few kilometers away. On the commercial front, NextGen has doubled its contracted sales by signing a 5-year deal with a major U.S. utility for $1 million a year once Rook I starts production. Pricing will be set at delivery, so they keep full exposure at any upside in the uranium market, and with nearly 230 million pounds still uncontracted, they have plenty of room to capture higher prices down the road. For investors, it's a powerful combination, expanding high-grade resources in a district already anchored by major players and locking in secure long-term sales without giving up price leverage. In today's tightening uranium market, that's the kind of positioning the market tends to reward. And that wraps up your Uranium Spotlight coverage for this week. For more news and events from the world of uranium, please tune in next week to Uranium Spotlight.
You've been listening to Uranium Spotlight, your weekly podcast dedicated to delivering the latest news and events shaping the uranium fuel market and its critical role in the global energy landscape. Brought to you by Purepoint Uranium Group. Purepoint actively operates a portfolio of advanced uranium projects in the world's richest uranium district and has established partnerships with industry leaders. While our passion for this subject is undeniable, it's essential to clarify that the information presented here is not investment advice. Instead, our goal is to offer an unbiased and comprehensive review of recent events that could impact uranium prices. Join us again next Tuesday for Uranium Spotlight.